Welcome to the Deep Dive, the show that cuts through the noise and gets right to the core of what you need to know. Today we're diving into a really fascinating story. It's about how a company, once widely known as maybe the cheaper alternative,
Right, that perception was definitely out there.
is now not just a major player, but actually outperforming some tech giants, particularly in this red-hot AI space.
Yeah.
You might have heard whispers about advanced micro devices, AMD, and maybe a noticeable dip after their Q2 earnings report came out.
There was definitely some chatter, yeah.
But what if that dip was actually maybe a fundamental misunderstanding of where the market and, where AMD are truly headed?
It's an excellent question. And this deep dive is all about AMD. We've gathered a stack of the latest analyses from financial experts, really dissecting everything from their recent Q2 performance to their strategic positioning in this incredibly dynamic AI market.
Right.
Our mission really is to unpack why, despite some of that immediate investor nervousness, multiple analysts aren't just recommending AMD, but are actually calling it a buy, or even a strong buy.
And what that means for your understanding of this tech landscape, because it's changing so fast.
Exactly.
That roadmap sets the stage perfectly. So, for you, our listener, what are the key milestones we'll be hitting in this deep dive? We'll start by exploring AMD's, surprisingly diverse business foundation.
Yeah, get the basics down.
Then we'll peel back the layers of that Q2 market panic almost to reveal maybe some hidden strengths. But the real game changer, I think, the story maybe few are telling, lies in their audacious bet on the future of artificial intelligence.
That's where it gets really interesting.
We'll uncover their competitive advantages, future plans, and of course, the critical risks to keep an eye on.
Absolutely. And to truly grasp AMD's ascent, you kind of have to acknowledge their journey. It's quite remarkable, really, to think that this company was trading around, $2 a share back in 2016?
Just incredible. Feels like a lifetime ago in tech years.
Right. Since then, under the leadership of Dr. Lisa Su, who's just widely respected, AMD has transformed into this innovative powerhouse. They're constantly pushing boundaries in computing.
It really is a testament to that long-term strategy, isn't it? And AMD's revenue isn't just from one place. They've strategically built up like 4 distinct pillars of revenue.
Yeah, a diversified foundation. It's
Yeah.
pretty robust.
Let's start with their largest, and you could argue most critical for future growth, the data center segment.
Absolutely. The data center segment is all about high-performance hardware,
Yeah.
stuff essential for servers, AI, cloud computing. This is the engine room.
Okay.
This is where you find their powerful EPYC processors and their Instinct accelerators, which, go head-to-head with NVIDIA's offerings.
That's the direct competition.
Yeah. And this segment has shown just immense growth. It rocketed from about $1.68 billion in sales in 2020 to $14.32 billion in the last 12 months. And get this, the total addressable market, the TAM, for this space is projected to be a staggering $500 billion by 2029.
$500 billion. That's not just a big pie, that's practically the whole bakery.
Chuckles lightly. It's enormous potential.
So what makes analysts so confident AMD can grab a really significant slice of that? Okay, but before we get too deep there, let's talk about the client segment. This is the one most people probably picture when they hear AMD.
Yeah, they're bread and butter for a long time.
Personal computers, the Ryzen family of processors.
That's where that decades-long rivalry with Intel has mostly played out. And AMD has, really made a significant comeback in recent years.
They really have.
A key advantage for them, and it's a huge barrier to entry for anyone else, is their x86 architecture license. They're one of only 2 companies globally.
Intel being the other one.
Intel being the other, yeah. They're the foundational tech that powers most, traditional PCs and servers. It's crucial.
Okay. And for anyone who loves gaming, the gaming segment is familiar ground. We're talking Radeon GPUs for PCs.
Right.
And those custom chips that power the current consoles, like the PlayStation 5 and Xbox series.
Yeah, the Radeon GPUs have seen pretty dramatic improvements with their RDNA architecture. They've become much more competitive. However, it's worth noting, this segment has felt the cooling in the broader gaming market recently.
Yeah, things have slowed down a bit.
And, the burst of the crypto mining bubble also impacted GPU demand there for a while.
Right, that artificial inflation. Okay, and finally, pillar number 4, the embedded segment. This one's pretty diverse, isn't it? Industrial, healthcare, cars.
Yeah, it covers a lot of ground.
Yeah.
And its capabilities got a huge boost from the Xilinx acquisition a couple of years back.
Ah, right. Z-Links. That was big.
So this segment includes embedded processors,
Yeah.
adaptive SACs, that's system on chips, basically a whole computer on one chip,
Okay.
and FPGAs, field programmable gate arrays. These are chips you can reconfigure after they're made.
Very specialized stuff.
Very. And what's compelling here from a business perspective is the high margins and these really long revenue cycles. It provides a stable, high-value income stream for AMD.
Okay, so with these 4 pillars firmly established, you might be wondering how they actually played out in the most recent financial snapshot.
Right, the Q2 results.
That brings us to their Q2 earnings. On the surface, looked pretty solid. Inline earnings per share, $0.48, and a revenue beat at $7.69 billion.
Yeah, beat expectations slightly on revenue.
Yet the stock initially dipped over 7%. Analysts pretty quickly called this an exaggeration, and it bounced back. So what caused that initial market wobble?
Well, the market reacted mainly to disappointing data center revenue, that number specifically, and, crucially, concerns about shipments to China. There was this specific ban, the MI308 ban, on certain high-performance chips.
I'm the export controller.
Exactly. That resulted in an estimated $800 million hit during Q2, directly impacting AMD's AI business revenue.
Ouch, that's significant.
It is. And it caused a pretty big contraction in their adjusted operating profit margin. That's the non-GAAP number. Analysts watch closely for core performance. It plunged from 24% down to just 12%.
Okay, so the market sees China, sees the margin dip, and reacts, almost reflexively, maybe?
Pretty much. But it seems like there were these hidden strengths they might have initially overlooked in that reaction.
Like what?
Well, precisely. While the data center's year-over-year growth was, kind of muted at 14% because of those specific headwinds we just mentioned,
Right.
the client and gaming segments actually skyrocketed. Client revenue was up an astounding 69% year-over-year.
69%.
Yeah, and 23% quarter-over-quarter. It even surpassed data center sales in Q2.
Wow. So PC sales and gaming were actually stronger than the data center in that quarter.
In that specific quarter, yes.
Yeah.
It indicates this really robust underlying demand for their Ryzen CPUs, the Radeon GPUs, and those console chips. Stuff that many initial analyses seem to just kind of gloss over.
That's a really powerful counter-narrative, showing the breadth of AMD's strength beyond just the immediate data center headlines.
Exactly.
And looking ahead to Q3, AMD's revenue outlook is strong. They're projecting $8.7 billion, which is like 28% year-over-year growth.
Yeah, strong guidance.
And what's really key here for you to understand is that this guidance excludes any revenue from those MI308 shipments to China.
Right, so that $800 million hit isn't baked into the recovery forecast.
Meaning there could be additional upside if those export licenses eventually get approved.
Potentially, yeah. And this guidance implies a significant operating profit margin restoration. The expectation is for it to rebound back up to 25%.
Back to normal levels?
Pretty much.
Yeah.
And this detail is precisely what analysts are highlighting as a strong reason for a potential stock re-rating. It suggests the Q2 dip really was an overreaction to some temporary factors.
Okay, now let's pivot. Let's get to what analysts are really buzzing about, the core thesis that kind of changes everything we thought we knew about AMD's AI strategy.
This is the really exciting part.
While NVIDIA clearly dominates AI training,
No question there, CUDA is dominant in training.
the argument is that AMD is strategically positioned to dominate AI inference.
And this is such a critical distinction that I think many investors are just missing. Think of it this way. Training is building the AI model. It's the heavy lifting, teaching it from huge amounts of data, super resource intensive.
Right, the initial setup.
Inference, on the other hand, is the ongoing everyday use of that trained AI model in the real world.
Like asking a chatbot a question.
Exactly. Or a self-driving car identifying an object. It's the application phase. And forget the AI training race for just a moment, because the real gold rush, analysts believe, the market projected to be maybe 10 times larger than training by 2030 is AI inference.
10 times. Wow.
Yeah. And this is where AMD is making its strategic and maybe often overlooked move.
So if inference is the future, the bigger market, what exactly gives AMD a leg up here? Is it just raw specs, or is there more to it?
Well, it starts with a significant technical edge, but one that translates directly into cost efficiency for customers, which is huge.
Okay.
AMD's MI300X accelerator comes with an impressive 192 gigabytes of HBM3 memory. That's high bandwidth memory, super fast RAM, crucial for AI.
192 gigs. And NVIDIA's comparable chip, the H100.
The H100 has 80 gigabytes.
So less than half.
Right. And this difference directly translates to potentially big cost savings and efficiency gains. For example, think about a large language model, maybe 70 billion parameters. It needs about 140 gigs of memory just for its weights.
Okay, so more than the H100 can hold on its own.
Exactly. An H100 can't handle that alone without complex, often costly workarounds, like splitting the model across multiple chips.
Which adds complexity and latency.
Right. But a single MI300X can handle it. It fits on one chip. This could potentially offer something like 3 times better cost efficiency for certain inference workloads.
That's a massive operational advantage for businesses trying to scale AI without breaking the bank.
Huge. And CEO Lisa Su is clearly articulating this vision. She's not being shy about it.
What is she saying?
She has emphatically stated that the inference space, she believes, will grow 80% annually. 80%.
Incredible growth.
And she highlighted how their newer MI355 chip delivers leadership performance and, crucially, clear total cost of ownership PCO advantages.
So focusing on that cost efficiency again.
Absolutely. And the trend towards more complex AI, like agentic AI and reasoning models, stuff that requires lots of inference steps and needs a lot of memory close by, that strongly favors AMD's memory-centric architecture. More memory on the chip is better for those kinds of tasks.
And it doesn't stop there, right? They're already looking ahead, MI400 series.
Yeah, they're already talking about the next generation. The MI400 series is planned for 2026. This, alongside their Helios rack-scale AI platform, they're promising something like a 10x generational performance increase.
10 times.
And potentially becoming, quote, the highest performance AI system in the world. That's a pretty audacious claim.
That is bold. But okay, hardware is one thing.
Right.
For any of this to matter in AI, they need the software ecosystem. For ages, that software barrier, NVIDIA's CUDA, felt like this unassailable fortress.
It really did. It was the moat around NVIDIA's castle for a long time.
Yeah.
But AMD's ROCm software platform, it has truly evolved. Analysts are saying it's now genuinely competitive.
And we're seeing real proof of that too, aren't we? Like over 2 million models on Hugging Face.
Which is the hub for AI developers.
Right. They now run natively on AMD hardware, and they have day zero support for major new models like Meta's Llama 4 and Google's Gemma 3.
Day zero support is key. It means when these hot new models drop, they work on AMD hardware right away, no waiting weeks or months for compatibility.
That indicates AMD has moved beyond just playing catch-up on the software side.
I think so. And ROCm's open-source nature is a really key differentiator.
Yeah.
It helps companies avoid vendor lock-in with NVIDIA.
Which hyperscalers hate.
Nobody likes vendor lock-in. And it supports multi-vendor AI strategies using tech from different companies. This is a big draw for enterprises looking for flexibility and control.
And speaking of enterprises and hyperscalers, the scale of investment happening in AI infrastructure is just mind-boggling.
It's staggering. Major players like Amazon, Microsoft, Meta, Alphabet, they're planning to spend roughly $314 billion in AI-related capital expenditure just this year.
$314 billion, wow.
Indeed. And a huge chunk of that, analysts estimate, around $100 billion annually from just those four, is going directly to GPUs.
Right.
And as AI moves from experimentation and initial training
The expensive part up front.
to widespread production deployments, running inference all the time, cost efficiency, where AMD believes it shines with that memory advantage, becomes absolutely paramount.
Makes sense. When you're deploying at scale, every bit of efficiency matters.
Totally.
And beyond the big U.S. hyperscalers, there's this other emerging demand driver, sovereign AI. What's that about?
Yeah, this is interesting. It refers to European governments, Middle Eastern sovereign wealth funds. They're making huge AI infrastructure investments themselves.
Why? National security. Data control.
Both. Often driven by national security concerns and wanting data sovereignty, keeping their data within their borders. They're seeking partners who can deliver complete solutions.
Okay.
But critically, they often want to avoid heavy dependence on any single vendor. Sound familiar?
Yeah, back to avoiding lock-in.
Exactly. This preference for open ecosystems and vendor diversification strongly favors AMD's strategy and their open ROCm platform. It's creating entirely new demand streams for them.
Okay, and underpinning all this hardware ambition is manufacturing. AMD has a strategic advantage through its fabless model, right? And its tight relationship with TSMC.
That's right. They don't own the factories, which saves massive capital costs. They have this incredibly close partnership with Taiwan Semiconductor, TSMC, the world's leading chip foundry.
And TSMC's CoWire's packaging, that's important here.
Hugely important. CoWoS, think of it as this highly specialized, super efficient way to stack and connect different chiplets together for extreme performance, especially putting memory right next to the processor.
Got it.
TSMC is doubling its CoWoS production capacity because demand is so high. And because AMD made early investments in HBM integration in this advanced packaging, they apparently have preferential access to this limited high-demand manufacturing capacity.
So they get dibs on the good stuff.
Effectively, yeah. It's a key bottleneck for the whole industry, and AMD seems well-positioned there.
It really feels like the timing is just right for AMD in a lot of ways. The industry isn't just growing, it seems to be fundamentally shifting.
From training-dominated to inference-dominated AI workloads. That's the thesis.
And is there evidence of that shift happening now?
There is. Alibaba Cloud, for instance, reported that 60 to 70% of their new AI demand following the Chinese New Year came from inference applications.
60 to 70%, that's a big number.
It tells us AI is rapidly moving from just being developed and trained to being embedded in actual business operations. It's creating a more predictable, recurring demand cycle where cost optimization is the name of the game.
Okay. And on top of all the strategic positioning, they've been shoring up key partnerships too, right? Like with Humane and Dell.
Yeah, those are crucial for getting their platforms adopted in the market, for integration. They've also been streamlining their own operations. They sold off their ZT Systems infrastructure business.
Right, I remember that.
A move that really sharpens their focus purely on chip design and AI. Leveraging that fabless model, they're concentrating on their core competencies.
Okay, so let's talk valuation, because with all this potential, you might expect it to be incredibly expensive.
Well, it's not cheap by traditional metrics. If you look at its non-GAAP PE ratio, that's earnings per share adjusted for certain items, the one analysts often favor. It's around 47.63.
Which sounds high in isolation.
It does. But its future AI prospects are what's driving that valuation. And crucially, analysts point out it's currently cheaper on a forward basis than peers like NVIDIA.
Really? Cheaper than NVIDIA?
On estimated 2026 earnings, yeah. NVIDIA is at about 31.1 times, while AMD is projected lower. And it's also cheaper than Broadcom, which is at 37.1 times.
So, relatively speaking, within that high-growth AI peer group, it doesn't look as stretched.
That's the argument. And analysts are putting intrinsic value estimates for AMD somewhere in the $175 to $210 range per share.
Which suggests there could still be significant upside even after the run it's had.
Based on these models, yes. But of course, no investment comes without risks. You absolutely have to look at the potential downsides.
Okay, so what should you, listening, be looking out for? What are the key risks?
Well, one of the primary ones is the ongoing uncertainty, some analysts call it random chaos, of those U.S.-China export restrictions.
Ones that caused the $800 million hit.
Exactly. Those controls previously caused that hit in Q2, and they continue to pose a risk of revenue volatility. It just depends on unpredictable license approvals. It's hard to forecast.
Makes sense. And then there's the elephant in the room, NVIDIA's established dominance.
You can't ignore it. NVIDIA's leadership, their brand recognition, that deeply entrenched CUDA software ecosystem, they remain formidable competitors, especially for customers who prioritize absolute maximum performance, maybe above cost.
They're often willing to pay that NVIDIA premium.
Often, yes. We also can't ignore the rise of ARM-based chipsets. Think Apple's shift with their M-series chips.
Right, very efficient.
Very efficient for mobile and embedded systems. That could pose a longer-term challenge to the traditional x86 architecture that both AMD and Intel rely on in PCs and servers.
And speaking of Intel, despite their recent struggles, you can't entirely write them off, can you?
No, absolutely not. There's always the possibility, however distant it might seem right now, of them regaining their manufacturing lead with their foundry services push. That would definitely alter the competitive landscape.
Okay. And one more big one.
Finally, there's the risk of those major hyperscalers, Amazon, Google, Microsoft, designing more of their own in-house AI processing units, like Google's TPUs or Amazon's Trainium and Inferentia.
Right, cutting out the middleman.
Yeah, which could reduce their reliance on external vendors like AMD or NVIDIA. It's a clear trend, though it also does create opportunities for custom silicon partnerships, which AMD also does.
Okay. So despite these real and, present risks, the overall buy case for AMD remains pretty strong from these analyst perspectives. What's the bottom line here? How do they synthesize all this?
Well, it's kind of multifaceted. First, they have that strong footing in their legacy CPU business PC servers. That generates stable cash flow.
The foundation.
That allows them to fuel strategic growth in their higher margin data center segment, which should lead to better overall returns.
Yeah.
And, the consistent strong leadership of Dr. Lisa Su is just constantly highlighted by analysts as a major, major asset for the company.
Her track record speaks for itself.
It really does. And what's more, just as a data point, AMD has actually outperformed NVIDIA year-to-date in stock growth. AMD is up about 43% versus NVIDIA's 36%.
Interesting. So despite NVIDIA grabbing headlines, AMD stock has actually done better recently.
Year-to-date, yes.
Okay, let's try and unpack all this then. We've taken a pretty deep dive into AMD, looking past that initial, maybe knee-jerk market reaction to their Q2 earnings, and seeing a company that looks strategically poised for the future of AI, particularly in that potentially massive inference market. They've kind of quietly become an absolute powerhouse.
Yeah, it's not just about competing head-to-head with the existing giants everywhere. It seems to be about identifying and dominating these emerging segments within a rapidly evolving industry.
Right. Focusing on areas like cost efficiency and that memory advantage, where they seem to have a distinct, maybe often underappreciated edge.
Exactly.
Totally. It's a strategic play.
So what does this all mean for you listening? Here's a final thought. If AMD's strategy to really dominate AI inference plays out, and cost-efficient, memory-rich AI becomes the new standard, what larger implications could that have? How might that change how AI is deployed and consumed across all industries in the coming decade?